Is AMC going to hit $1,000 price? What is the role of option traders in the analysis of AMC's common and ape securities? Why has there been a surge in the acquisition of AMC and ape shares? What factors are contributing to AMC's stronger performance compared to ape in this context? Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert: this is not a financial advice video. In a strategic move that has both insiders and market analysts intrigued, the imminent conversion of ape units into common stock is set to reshape the landscape of stock trading. This development holds the potential to significantly alter the dynamics of Class A shares, a transformation that has been under scrutiny within financial circles. While the core concept is well known, the shift from ape units to common stock, a closer examination reveals unexpected subtleties that have flown under the radar of many observers. The prevailing sentiment on Wall Street, rather intriguingly, leans toward a scenario of bullish price action. This stance diverges sharply from the popular anticipation of an immediate and pronounced selling pressure following the conversion. However, as these competing expectations vie for prominence, it's worth taking a deeper dive into the rationale behind these opposing viewpoints. Central to this transformation is a strategic maneuver by the management, the initiation of an ATM, at the market program. This program lays the foundation for the sale of up to 25 million shares, a tactical maneuver that adds an element of delicacy to the proceedings. What's particularly interesting is the swift introduction of these shares to the market. The underlying strategy hinges on capitalizing on the perceived allure of post-conversion stock prices. In essence, this mirrors the psychological dynamics often observed during IPOs. In those initial moments, prices tend to surge only to be followed by a subsequent drop-off. This analogy fuels the speculation that a favorable outcome could be in the offing. To lend credence to this speculation, one needs to look no further than the past. The case in point is the ape, a stock that underwent a similar journey. The ape was initially issued at around $7, ascending to $10 before encountering a period of stagnation. This historical precedent suggests that a second round of trading might outshine its predecessor. Specifically, if we draw parallels to AMC's situation, the expectation is that once the conversion is live and trading commences, AMC's performance might well be subdued initially. This cautious optimism finds its roots in the single trading day that bridges the reverse stock split and the conversion. Given the consistent historical trend of a market decline on Fridays, it's natural to anticipate an outflow of trading activity on those days. It's the subsequent week that warrants attention as AMC's common and ape securities settle into trading. The expectation, rooted in the positioning of option traders, is that both securities could experience a dip in value. The focal point of this analysis is the concentration of substantial volume and open interest in out-of-the-money options. These options, with strike prices at $4 and $10, paint a picture of short-term optimism, possibly indicating expectations of a price bump or squeeze. Yet it's crucial to acknowledge that this doesn't necessarily imply a uniform bullish sentiment. Some of these positions might be hedged with put options, introducing a multifaceted aspect to the unfolding scenario. This anticipation is framed within the context of the days leading up to the reverse stock split, omitting the factor of its impact. It's important to note that these expectations could change dramatically after the split. The broader consensus is that AMC's common stock could potentially trade around or above $4 in the days leading up to the conversion. The more optimistic projections even entertain the idea of a substantial leap to the $10 mark or even beyond. However, this forecast becomes all the more intriguing when juxtaposed with the recent sell-off and the decline in short interest. As one would expect, there has been a noticeable surge in the acquisition of both AMC and APE shares. This trend isn't without its rationale. Observing the performance of both securities relative to the broader market, it becomes evident that investors are striving to round up their portfolios post the reverse stock split. The motivation behind this activity is to hold complete shares, given that fractional shares will be converted to cash. However, the intrigue deepens when we delve into the realm of fractional shares and their interconnectedness with the phenomenon of fail-to-deliver FTD securities. A prevailing theory posits that institutional investors holding fractional shares, shares that won't undergo conversion, might be required to provide cash equivalents for these fragments. This potential necessity could translate into substantial financial implications, potentially reaching into the realm of millions of dollars. This speculation could very well explain AMC's outperformance, a phenomenon that might eclipse APE's performance in this context. The driving forces behind this trend are manifold. Institutional investors, faced with the necessity of addressing their FTDs, might be inclined to buy to cover their positions. Brokers, on their part, could also play a significant role, given their pivotal role in rectifying issues arising from FTDs. This indicates that the buying force might not be confined solely to individual investors. Consequently, this dynamic could be contributing to AMC's stronger performance relative to APE, which might not possess as strong an intrinsic value. To complicate matters further, there's the intriguing concept of negative beta. In a scenario where the broader market experiences a decline, AMC could potentially exhibit an unexpected upward trend. This was distinctly observable in recent days, when AMC managed to maintain its upward trajectory even as the broader market faced challenges. This introduces an element of uncertainty, suggesting that future developments might deviate from conventional expectations. In conclusion, the impending transformation of APE units into common stock is poised to usher in a paradigm shift in the realm of stock trading. The fusion of known variables with unforeseen subtleties forms the bedrock of intrigue surrounding this event. Market expectations and Wall Street sentiments seem to be on divergent trajectories, and as the conversion approaches, the complex interplay of these dynamics is likely to unveil a narrative that defies conventional wisdom. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.